This was the week in the United States in which the bipartisan Congressional Deficit Reduction Committee failed to secure agreement and improve the fiscal fortunes of the state. The failure wasn't unexpected, but occasioned a large amount of commentary about the dysfunctionality politically of the union and the poor health of the economy. Time then for some cool, sober-headed assessment of the question of confidence in the US economy and its future and some of the political implications of this failure. Tom Wales, let's start with the fiscal fortunes of the United States. They don't look good, but they're portrayed perhaps more negatively than they need to be.
Yeah, I mean, the gross debt to GDP ratio in the United States is about 100%, which is bad. But the net, that's actually deceptive because the net debt to GDP ratio, excluding the Social Security Trust Fund, essentially the government money that the government owes to itself or that the government has set aside for retirees, is only about 70-something% at the moment, rising towards about 80%. But that's not significantly worse than this country or, say, France. In fact, it's a little better than France. So, the overall picture is hardly dire. It doesn't face a euro-type situation because it issues debt in its own currency. And that means that, and it also has an aggressive central bank, unlike the ECB. So we really have zero to worry about in regard to the short to medium term U.S. fiscal situation.
Let's talk about the failure of the committee's consequences, because automatic cuts take effect 2013, and they are rather punitive and swinging.
Well, the ironic thing is that the rating agencies, the two that haven't downgraded the U.S., Fitch and Moody's, have come out and basically said that they would view any move to reduce the level of cuts as negative in regard to the U.S. sovereign debt rating. Not that that matters. But, of course, if they allow these cuts to go ahead as is, which come almost exclusively out of current spending, a few minor adjustments to Medicare aside, accompanied by the scheduled end of the Bush tax cuts at the end of 2012, well, you actually have too much consolidation all at once. You risk pushing the economy back into recession. It's a really dumb idea. Everybody in Congress knows this. So there will be an attempt to alter it, and the alteration will be, exactly the nature of the alteration will be determined by the outcome of the election. If the president's reelected, there will be some entitlement reform, not a tremendous amount. It won't be revolutionary. There will be defense cuts, not as steep as currently scheduled, which would actually be disruptive. They're too steep. And there will be a tax increase on wealthier Americans and maybe some tax reform agreed with Republicans around the edges in terms of corporate taxes and the like. If Mitt Romney wins, there will be much less significant defense cuts. There will be much more radical, actually pretty interesting entitlement reform, and there will be relatively few revenue increases, although he's not going to be able to keep his promise not to do any of them.
So the fiscal situation is a little bit better than it's often portrayed.
Much
Nonetheless,
better.
What's happened this week is a little bit unfortunate in the sense that the United States economy, though much better than that in Europe, is still somewhat fragile, and we could have done with a confidence boost in a sense, particularly before Thanksgiving and everything.
Yeah, the crucial indicator now is whether or not Congress is able to extend and expand the payroll tax cuts proposed by the president as part of his jobs package, which was rejected by Republicans in Congress. If those payroll tax cuts go ahead, accompanied by an extension of the 99-week limit on unemployment insurance collection, then you have a kind of very mildly stimulative fiscal situation headed into next year. There are a couple of other fiscal sort of pullbacks, roughly neutral, which means that you could give business a slight bit of confidence and show that the two parties can come together on major issues. They actually can. The U.S. government is not as dysfunctional as it appears. They finally passed the free trade agreements with South Korea, Colombia, and Panama. So I think everybody is reading everything at the moment as extremely negative. That's because of the euro situation, which is very serious and could upset the apple cart in the U.S. if it is absolutely apocalyptic. The worst case scenario develops, the euro collapses. But absent a massive disaster, I think the U.S. Economy can sort of continue muddling through at the moment.
Sounds like a very good note on which to end. Tom Wales, thanks very much. And thank you for watching this video. On our website, you can find examples of our analysis and advisory work. Do please feel free to contact us if we help you in any way. Thanks for watching.